All right, we're going to start right about now. So if you haven't already scanned this QR code, I highly recommend you to scan it just so that we do know that you exist. Also want to make sure I click that button. Perfect. So in orientation, we talked a lot about what we're going to be covering, and I kind of want to break that down further, and I want to break down some of the events that we're going to be having. So just so you do know, and I'm going to help you visually break that down too by giving you a tour of our website, but we have 5 units we cover. Each unit has 3 presentations, and we present 1 presentation every meeting day we do have, meaning that we technically have 15 meeting days where we're just going to be covering presentations. Now, after we finish a unit, we then have something called a social event, and I'm sure you've seen posters of IBC social around school, but that's after every unit, and knowing that we have 5 units, that means we have 5 social events. So we have a total of around 20 meetings, and if you include the orientation, 21 meetings, meaning that we're going to be meeting for around 21 weeks. However, we do post all of our videos as I'm recording it now on our Google Classroom. So in the case you do miss a meeting, you could easily catch up by watching the video on there. Also, just to note, after every single unit is completed, we have that social event where we talk with a real investment banker. Sometimes they're here in person, sometimes they're on Zoom, but a lot of the questions that you may have now will be answered by them, and just so much more, right? You're getting lots of experience and information from a veteran of finance. So make sure that you take advantage of those. Now, that was basically that. Let me also show you where you can, if you do plan on becoming an officer, or if you're just curious, where you can find this presentation on our website. So we'll just type in www.ibcproject.co. And once you become a member, you can just head down to chapter 1, 1.1, and you'll find all of the slides in the videos, and basically everything that you need. But now that we've gotten that out of the way, we can actually go to what we care about, which is what we're learning about today. So we're learning about what investment banking is, right? Today, we're going to cover a lot more about the institution than we usually do. So usually we're diving into what investment banking is. What's important for you to understand is that investment banking is a service. Now, what does the service do? It enables capitalism. We wouldn't have capitalism if we didn't have investment banking. Why? Because investment banks are the middlemen, and middlemen are very important, and I'm going to break into that in a second. But investment banks are the middlemen that allow, well, people with ideas but no money to get the money that they need from investors that want to make a return on their capital. They simply connect everything together. They allow the circuit to flow. So yeah, that is investment banking in a nutshell, but we're going to break it down a lot. And we're going to start by this video right over here. Now, this isn't specifically tailored to investment banking, but more so what finance is. So do any of you guys know what the word finance means or have an idea of what it's related to? Go on, Reed. I know you know the answer. Yeah, money. There we go. Finance is related to money. So like if I were to use finance in a word, like I'm not trying to be nerdy, but if I'm trying to say, hey, look, I work in finance and use it as a noun, I'm probably talking about managing other people's money or just working with money. But if I'm to use it as a verb and say, hey, look, I just financed my car, well, that means that I figured out how to fund my car. So that's a notable discrepancy that I just want you guys to keep in your head so you know what I'm talking about when I say, hey, look, he's financing this, or hey, look, he works in finance, or this is what finance. So right now we're going to be talking about that noun finance. What is the world of finance? And what's really important to note here is that finance is divided into the buy and the sell side. So are any of you guys interested in trading stocks individually, building your wealth, or just trading day to day so that you have some kind of income instead of just investing? Well, like, I know David probably is, but if you're interested in that, you're probably going to lie on the buy side of finance, meaning you're going to work with hedge funds, you're going to work with mutual funds, and in essence, you're going to manage other people's money for them. You're going to try and build wealth for them, or you're just going to be a day trader of some sort. Now, the sell side is where investment banking as a service lies, hence where most investment banks lie. Investment banking is a service provided by investment banks. Investment banks do a whole myriad of things just so that they can make profit, and we're going to talk about that in a second. But sell side is responsible for selling things for the most part. So let's just go into this video, and it should make a bit more sense. Do I need to do anything special to enable sound? Let me unpause.
Hi. So, you've heard the terms buy side and sell side.
I think it's on my laptop.
But still have no idea what they mean.
Yeah, can you guys hear that fine? Okay, and I'll just enable captions as well, so you can read it.
So, you've heard the terms buy side and sell side, but still have no idea what they mean. Let's see if we can clear this up a little. At a high level, the buy side consists of investment firms that invest in both public and private market investments, whereas the sell side consists of investment banks that sell advisory and capital raising services to both businesses and buy side investment firms. Let's introduce the key players. First, we have the businesses operated by CEOs. CEOs run businesses ranging from young startups to established businesses like Microsoft and Amazon. The CEOs have one key objective to grow their business. Then we have our investors, which come in a few flavors. First, we have our public investors. Hedge fund and mutual fund investors research investment ideas, which result in buy and sell orders. Through those orders, they invest in equity securities, or stocks, which are traded on market exchanges, which we call the stock market. And while it's less well known, there is a similar market for debt securities, which we refer to as the credit market.
You don't need to worry about that.
On the private side, venture capital funds make investments in young, early stage businesses. Venture capital investments are typically only for a small ownership stake in the company. By contrast, leveraged buyouts, or LBO investors, typically invest in mature or late stage businesses where they buy the entire company. There is one more group of investors in between venture capital and LBO investors called growth equity investors, but we're going to wait until a later video to discuss them in detail. Overall, the goal of these firms is to take in capital and earn a return for their investors. These firms invest by buying and selling all or part of a company, so they are called the buy side. An investment bank sits in the middle of this world and enables transactions to occur. Investment banks have a few key divisions: investment banking, capital markets, sales and trading, and research. Let's see how they operate. For public market investors, investment banks provide advice on investments through their research analysts. When hedge fund and mutual fund investors are ready to buy or sell in the market, the investment bank's sales and trading division helps the investors make their trades. Now, let's say a CEO decides they want to sell their company. An investment banker will market the CEO's company to other companies or strategic buyers, as well as investors or financial buyers, and collect a percentage of the value of the company sold. Or maybe a CEO decides they want to buy a business. An investment banker can help the CEO find acquisition targets and help them execute the purchase, for which they, again, collect a percentage of the acquired company. Or maybe a CEO decides they need to raise debt or investor, i.e., equity capital. The investment banker can work with their capital markets group to help the company access the equity markets to raise money. And if it's the first time, this is called an initial public offering, or IPO. Capital markets can also help raise debt capital as well. In return for raising equity or debt, the bank collects a percentage of the money raised as a fee. For early stage businesses, investment bankers will help the company raise money from venture capital funds to help them grow their business. In short, the investment bank sells a variety of services that enable transactions to occur, and as a result, their activities are referred to as the sell side. To recap, the buy side consists of investment firms that invest in both public and private market investments to generate returns for their investors, and the sell side consists of investment banks that sell advisory and capital raising services to both businesses and buy side investment firms. Hopefully, the terms buy side and sell side make a little more sense now.
I'm sure all of you in this classroom have heard a lot of great success stories of people within finance. At least people within finance taking advantage of finance's lucrativity and becoming millionaires and billionaires. It's that, the buy side and sell side, that they're capitalizing on to, well, build capital for themselves. Investment banking, many of the services provided by investment banks, because they work with companies, remember, companies are expensive, will make investment banks really profitable. Hence, the people that are doing those things, the investment bankers, make a lot of money. And I'm going to break down the salary chart of investment bankers soon. That's going to be in 1.3, so in about 2 weeks. Buy side, just as lucrative. That deals more with you individually researching investments and investing people's money within them to build their wealth overall. So we won't talk too much about the buy side. We're mostly going to talk about the sell side. But the reason I talk about the sell side so extensively anyways, and the reason why I even discuss investment banking in the first place, is because of it being a platform. If you talk with anyone, because let's be honest, most people don't know if they want to go into the sell side and buy side super early. But a lot of people still do eventually end up on the buy side or some specific niche area of finance. They end up there because they used investment banking, that sell side area, as a platform. Right? So investment banking is versatile because of the exit opportunities that it gives you. And also, whenever we explain a slide like this, it has a lot of text, but don't worry about reading the text. We'll break down that text for you. So Crawford, you're up.
So investment banking, really just give you a kind of a muddled down definition, just a kind of vague thing. It really, investment bankers are really just the middlemen of transactions, right? Really any type of exchange of money on a large scale, especially involving corporations, will involve investment bankers. Just an example of it, they raise money for investors by selling securities, and then that money is transferred to companies, corporations, government, etc. Just really know, vague definition is that they are the middlemen.
Yeah. Thank you, Prof. So one important thing to note is this word securities. What do I mean by that? Are there private personnel traveling with these companies to combat, I don't know, evil people? No, that's not what securities is. And we're going to break down securities next week when we talk about specific investments like stocks, bonds, some hybrid securities like credit default swaps and preferred shares. But securities is just a synonym for investments, or you can think of them synonymously. All it is an investment. So if I'm to break this down further, it just means that investment banks raise money from investors by the sale of investments. This money is then transferred to companies, corporations, governments, etc. Now, note that in that video, we talked about multiple services of investment banks. This portion right here is called capital raising, and Cullen's going to break it down further for you. But capital raising is one of those really big services of investment banks, but it's not limited to that service.
All right, the main thing with investment banks you gotta know is capital raising, which basically like a company needs money, investment banks, they're gonna be able to give that money to them, whether it's like raising money or just giving them the money that they already have, right? Also, they also act as a brokerage service. What's a brokerage service? When you think of like, oh, you gotta access stocks, right? You can't directly access stocks from the company, right? So obviously you're gonna need to go through a brokerage service to access those stocks. That's what they act like sometimes. They also help with sales and training. So what that means, it's kind of self-explanatory. Whenever like a company or the investment bank themselves, they're gonna make sales and trades of financial instruments using their own or the client's money, which means they're either going to use the company's money or the money that they have themselves. Another big factor of investment banks, they also do a lot of research. So they help companies make big financial decisions, whether that's like investing or like making a financial big decision like merging or whatever. That's always going to be part of that. They also do corporate lending. What that means is when companies need money for their ideas, right? They can offer, like I said before, they can offer that large amount of money for the idea. They can also act as a financial advisory. It doesn't only extend to money or giving out money. Whenever another company needs help to make the right decisions, investment banks can act as that advisory. And like I said, mergers and acquisitions. What that means is when two companies merge or acquire another company, investment banks can help them make that decision. And that kind of explains the investments, defines it right here. This is where banks serve as the middleman between investors and organizations. But at times, investment banks themselves, they will themselves, instead of helping, acting as middlemen, they themselves will give them money to help them make that investment.
All right, thank you, Colin. So I'm just going to break things down just a little bit further to clarify certain things. But look, that mergers and acquisitions part that's bolded right over here, notice that they talked a bit about mergers and acquisitions in the video. Specifically, they mentioned a strategic buyer of some sort. So one thing I want you to note about both mergers and acquisitions and private equity, I'll get to that in 30 seconds, they're some of the most profitable industries in the world. This is where financial billionaires are made, and that's the only reason I care about them. But also, if we think about it, right, companies exist because, well, I'm going to break that down a bit further. But look, there are lots of companies, right? Lots of services to be offered. When you read the news, oftentimes you're going to see that one company combined with another company and another company combined with another company. It's just a really big process. It's a really big cycle, and it's super prominent, right? This is the billionaire business, the billionaire game. That's mergers and acquisitions, and investment bankers are involved in that. We're going to talk all about that in Unit 4. We're going to talk about shark's blood, defending from some kind of hostile takeover, so on and so forth. So it's going to get really interesting and intricate. And when we talk about investments, right, when I was referring to investment bankers acting as a middleman, I was talking about capital raising right over here, where they're acting as a middleman between, well, companies that need money and investors that have that money to give to companies. Sometimes investment banks are going to be like, screw it, I don't need another investor's money, or I don't want to facilitate this trade. I want to be in the trade in that I'm going to provide money to a company, or not really provide company to a money, but I'm literally going to buy a company, I'm going to rearrange it, and then I'm going to sell it for a profit. It's house flipping, car flipping, but on steroids, basically. That's what private equity is, and we're going to dive straight into that. Unit 5 and Unit 2, so it should be interesting. But important to note, investment banks, as some solid brick and mortar thing, offer a large menu of services. They're individuals just like me and you, and they're different. Not all of them offer these services, and we're going to break that down tomorrow. So Nicholas, not tomorrow, sorry, next meeting. But Nicholas was supposed to cover this, but unfortunately he wasn't here today, so I'm going to cover it. Super great. So what's the difference between investment and traditional banking? So can any of you guys tell me what you think a traditional bank is? If you're taking financial math right now, you'll probably know what a traditional bank is since you're doing that. But traditional banks are where you bank at, right? So when you open an account, a checkings account, a savings account, so on and so forth, you're working with a traditional bank. You're withdrawing money, so on and so forth. Investment banks are very different from traditional banks. Traditional banks work with individual people like you and me. Investment banks don't really work with individual people. Although, like I did say, investment banks can be unique depending on the investment bank, and sometimes they'll have a particular service tailored to an individual. They work with companies because they have lots of money and they care about lots of money, right? So what's important to note is that both banks are similar in the sense that they obtain cash from people that have large amounts of it and put it into the hands of others that have ideas on how to use it. But the way that they do it is different. And I'm going to break that down once more. But what's important to kind of note about traditional banks is that there are two types: commercial banks and retail banks. Commercial banks, as you would assume, deal with businesses, whereas retail banks deal with individuals like you and me. It's what your parents use for whatever transaction they need to, well, do. Investment banks are different. So if I'm to break down how a traditional bank works, you deposit money into your savings account, for example. Why does a traditional bank give you interest for the money that you deposited into the savings account? Does anyone know? It's because they appreciate you. You think that they just keep that money in the savings account? No, they're using that money. They're giving that money out to people who are taking loans from the bank, and they're giving you interest as appreciation. And as you would assume, that's risky, right? That's why we have the Federal Deposit Insurance Corporation to insure up to $250,000 of whatever's in your savings, so on and so forth. That has to do with traditional banks. I don't really care about it. If you know about it, that's great. But look, those banks give you interest because you're giving money to them in their savings account. So if I'm to break this down, what is occurring? Well, people who have an excess amount of money that want to put their money into a savings account do that. And then the bank is going to give money to people who need it. Well, with investment banks, it's kind of similar, but they're going to raise money from those people that have excess money by crafting securities, crafting investments. Investment banks can make their own investments. There are many investments they've made. Well, they'll get money from people who invest in those investments, and then they'll give that money to people that, not people, but to companies. Whenever I say people and I'm talking about investment banks, I'm usually talking about companies. But to companies that are in need of that money. And that security or that investment will usually relate to that company. If you don't understand that process yet, don't worry. In Unit 3, when we talk about the initial public offering and capital markets, this is going to make a lot more sense. And underwriting ties into all of this. You don't really need to know what that is right now. It just means taking a financial risk for a fee. And I promise I'll break that down really well for you, but not right now because you don't need to know about it. But yeah, that's about it for today. Today was super short. Usually our meetings are going to be a bit longer, or like we'll have quite a bit more slides to cover. But again, scan this link tree in the case you haven't filled out the application, in the case that you need to join the Google Classroom. Please join the Remind if you haven't already, because that's where I communicate with you guys. And just a few other things are on there. Also follow us on Instagram, right? We're trying to beat a lot of other clubs, and we also post probably the most consistently out of any other club. So make sure to catch up on those posts. Share it with your friends. You never know, right? Yeah, that's about it. If you haven't already scanned that link tree, I'll go back to it in a second. But these are the credits in the case that you're really curious. And yeah, that's about it. If you guys have any questions, you can stay after class or you can ask them right now. But yeah, hopefully everyone has a good day. And next meeting, we're going to talk all about securities and organization. So I can pull that up for you guys if you want. So this is what we're going to be covering next week. 1.2 is securities and organization. So we're going to be covering, well, the types of securities or investments that exist. We're going to cover the corporate structure, so the structure of an investment bank specifically, so the inside structure of an investment bank, and then their structure as a whole relative to other investment banks. So like, what are the bigger investment banks? What are the smaller ones? What do we call them? That's important because when we talk with our investment bankers at the end of our unit, we're going to need to identify, well, what position do they have within the investment banking world? Where are they? What bank are they at? Because that's going to make a big difference on your understanding of them. We're going to talk a bit more about the sell side and the buy side. More specifically, we're going to talk about the sell and buy side that already exists in an investment bank. So I know that's kind of confusing, but yeah, we have that division of the finance world into the sell and buy side. We also kind of have a division inside of an investment bank that can lead to conflicts of interest, and it should get kind of interesting. Then the bank structure and the larger bank structure, which kind of just relate to that corporate structure right over here. But we're going to talk a lot about investments. So if you don't know what stocks are, bonds are, credit default swaps, what preferred shares, we're going to talk all about that tomorrow. And you know, if you're doing the investment competition that's also going on, that might be interesting to you. But yeah, hopefully everyone has a great day. And again, if you have any questions, just ask me after class. Ask David.
MHS meeting. Can I have the attendance thing?
Sorry?
I was at the MHS meeting.
Oh yeah, sure.